Make yourselves comfortable and enjoy the talk.
Okay, mic check. Okay, good morning everyone, and I hope you're awake. Welcome to our next panel. Today, I would like to start with an intro and some housekeeping. We'll be talking about the future of DeFi. A little bit we'll cover history because you know recent events, and then we will touch on the future of DeFi. We have 4 great panelists. One of them is joining us online, Julien. I guess he's still trying to join, but we might also start. I'll start with a quick intro and then we'll go with the panelists. My name is Valentin. I work as an executive director at ITSA. We develop standards for the global token markets. On the other hand, we also develop a comprehensive framework for classifying tokens on any type of blockchain, on any type of assets. So let's get started with a quick intro. Garry, could you introduce yourself?
Sure, thank you. My name is Garry, and I'm from OVX Protocol. OVX Protocol is Polygon's next-gen native money market with a focus on risk management that I think we all need these days. And yeah, we wanna build a new base layer for money markets on Polygon, supporting the upcoming ZK EVM, Polygon Supernets, and the broader ecosystem consisting of 50,000 apps.
Peter?
Hey, I'm Peter. I'm co-founder and CTO at Unstoppable Finance, and we're building Ultimate. And Ultimate is a wallet, and we want to bring DeFi to the masses. And how are we doing this? So we believe that the usability of DeFi is broken, and therefore it really requires products that normal people are able to use, like a broker in their pockets, or like a Robinhood, but for DeFi. Furthermore, we are investing a lot of time in education, especially also talking to mainstream media and trying to bring the next 15 million people into the DeFi space. And furthermore, we also engage ourselves in like conversations with regulators, politicians, and so on, because DeFi can make its way to the masses if kind of like it's usable, if the products are there, the people understand it, and also kind of the political environment really sees the opportunity in there. Before starting Unstoppable, I co-founded Solaris Bank as a CTO and built up Börse Stuttgart Digital Exchange. So in short, I'm a technical person coming from TradFi over CeFi to DeFi now.
Thank you, Peter. Kevin?
Hey everybody, thank you for having me. I'm Kevin. I'm the COO at XDEFI Wallet. We're a Chrome extension wallet. Similar to MetaMask or Phantom, the difference is they only support one blockchain framework. So MetaMask only works with Ethereum networks. At XDEFI, we are agnostic to chain, so we support 15 blockchains, including the major EVM chains like Ethereum, Avalanche, Polygon, as well as Bitcoin, Thorchain, and Solana.
Okay, I would like to start with a question for all of you, and we'll go one by one. Most of your crypto OGs have been in the crypto space for a longer time, but let's focus on 2020, the DeFi summer, and what happened afterwards until today. If you go backwards and reflect on what happened, what was the journey, do you have some favorite events, some surprises, favorite protocols, something that surprised you, or maybe disappointments until today? What was the journey from DeFi summer until today for you guys? Garry?
That's a great question. So I think we can all agree there was quite a magical, unique time in DeFi when everything seemed to be growing explosively, what people used to say, like a Cambrian explosion. For me, I guess favorite moments were, I don't know, where Chef Nomi from SushiSwap just disappeared with the treasury and then reappeared a month later, or early signs of algorithmic stablecoins not working. I remember on Polygon actually there was something known as Iron Finance. I never saw such a huge green candle, and I never saw such a huge even bigger red candle in such a short period of time. So I think, and people still, went on using similar products, which is, I think, tells you that people really were mind blown by okay, how fast things are growing, and wanted to for this to ever continue. But as we all know, all good things come to an end one way or another.
Yeah. By the way, Julien is joining us on the live channel. Hi, Julien. Can you do a quick intro for the audience, and then we can move on with the other guests?
Yeah, sure. So my name is Julien Bouteloup. I've been in the space for quite some time. I ran a family office. We invest in the space, and we also have a quant hedge fund desk, a quant desk, where we do arbitrage, liquidations, and all the type of things in the industry. And we also build, I also built different projects. Stakeout is an asset manager, completely trustless, and so with 300 million or something like that that we manage. We have Rect News. Rect News is probably the leader in the investigations. It's an investigative firm where we analyze exploits, hacks, and we also create some video content for the industry. Blackpool is a hedge fund for the NFT market. We are pretty big in the industry, like for example in Sorare, managing assets in the industry, and also involved in the early days with Michael, who founded the project Curve. Curve is the biggest DeFi project, the auto market maker for the industry.
Okay, thank you. Maybe I'm going to repeat the question just because you joined us a little bit late. So I had a question for the panelists. What was the journey for them since DeFi summer until today? Were there some surprises, some favorite protocols, maybe some disappointments around? So I would hand over to Peter, and then we'll come back to you, Julien.
All right, yeah, for me, big surprises. Well, so I'm also in the space since end of 2016, and when there was the first crypto winter, I was also thinking okay, so what's going to happen now? And luckily, and that was my positive surprise, the crypto winter was really used to build a lot of innovation, especially in the DeFi space. So kind of after the crypto winter, when the prices started to pick up again, kind of a lot of products and projects came out of the stealth mode at the same time. And so for me, this was really kind of giving back also a lot of energy again, really seeing okay, so we're not dead, we're alive, and also luckily it turned out that crypto winters are good timings or good time frames to really build stuff, and so we're in the crypto winter again, so it's a great time for building. The other surprise that for me was so as back in the days, I was working at Börse Stuttgart and building this regulated crypto exchange, and so I was for the mission of that project, I was also always explaining to the people the future will be the DAO, or the DAO MTFs, so the multilateral trading facilities that are based on a DAO, and kind of so they were the self-driving cars. I explained it to the people it's the self-driving crypto exchange, or the self-driving exchange. And when summer of DeFi happened, and especially Uniswap really showed hey, with automated market makers, we can build exchanges that can really handle a massive amount of load, and as it's kind of B2C and B2B at the same time, because other protocols are able to integrate with the smart contract APIs, so they were able to generate a lot of volume in a very short amount of time. And so I think even in the crypto winter times like we have right now, there still news that Uniswap is still having, or already having more volume than Coinbase, for example, and I think that's a super good example for a product and project that really got adoption, and it's also a super important key element and Lego brick that many projects are using.
Okay, thank you, Kevin.
Yeah, so in crypto 2020, I was lead product manager at Kraken for working on their front-end trading interface, their mobile app, and their market maker program. So I'd be working every day, long days at Kraken, and then all night just like degenning in yield farming. It was really, really fun, if any of you guys were around for that. Like doing the math of like, this thing is yielding 9,000% a year, so if I don't get rugged by tomorrow morning, I'll break even. Like, that's kind of fun, right? And just doing that all the time. So that was like a real sort of frenzied period and a really fun time in crypto, but what it showed was that these technologies can work. It was done in sort of gamified, silly, it was all food name memes, like, but everybody kind of saw that like there was something cool happening there and something very powerful happening. And that's why I made the move from CeFi over to DeFi, is because of what I learned in that period and saw the real potential of what could happen if you strip away the gaming and the silliness of it all. There is something really big happening here.
Okay, thank you. Julien? Can you hear us, Julien?
Yeah, I can hear you. So the question is, can you repeat the question? Is like what I like from the past, or what I think it's very shocked me recently?
How was the journey for you from the DeFi summer 2020 until today? Like, did you have like some favorite protocols, some surprises, some disappointments? How was the whole journey for you, ups and downs maybe? Yeah.
Well, I mean, we've built one of the major DeFi protocol in the industry. Also, so Curve Finance, which is the biggest auto market maker. So, yeah, being involved in one of the largest DeFi project, it's quite an experience. And also, I built some, for example, Rekt or StakeDAO, Blackpool. Now they are considered as also some of the biggest DeFi projects. So the industry can be also like very toxic. So what we experience is we've been constantly building, but also at our own pace, meaning that we are really into security and audits, where back then, a year or 2 years ago, people were shipping some very quick projects without audits. As mentioned before, someone from the panel, this yield farming type of projects that were clearly Ponzi games. So it was a time where we were building like with strong values, but the industry was more into those kind of really high yield farming type of projects. So it was quite interesting. And now today completely changed. Those projects they have disappeared, and now we are back onto some intrinsic value about like some normal financial products. What shocked me is every time the story happens again, like the same story, is that people, for example, Luna and Terra, which was clearly a Ponzi project, but people still invest in those projects massively, and then they get wrecked. People put their entire money into centralized exchanges, and they get wrecked, and then they complain that this exchange that hold the money in a centralized way got down, and the people lost money. So my point is, we are building some very strong piece of infrastructure, a very strong piece of software technology, but still a lot of people will go into the back traditional financial way and then get harmed by the same people that built the current system.
Okay, thank you. Speaking of centralized exchanges, looking back for the past year, we saw a few collapses like Celsius, BlockFi, FTX, very recent. So there is some kind of pattern, like all these centralized services, they failed because of reasons. And on the other hand, we saw like DeFi, the real DeFi, like the protocols, Uniswap, Curve, everything was ticking like a clock, nothing was happening, no failed projects, except for a few Ponzi's, like Julien mentioned, like maybe Terra Luna wasn't a perfect design, but everything that was designed good survived this push downwards. So what's your take on that? Like, Is this built into the protocol to survive these crashes? Or this was some kind of luck maybe? I don't know. Who wants to take over?
Just something. You said that Luna was not perfectly designed. Luna was perfectly designed. It was perfectly designed as a Ponzi to operate as a Ponzi. I want to be clear that it was not like a wrong design that collapsed. It was an inflationary way of maintaining the peg of an asset by selling the token to other people, and the value of the peg could be maintained by people buying the asset, which is clearly the definition of Ponzi. So it was a sophisticated way of Ponzi people. That's it. I just wanted to mention it because people tend to say that it was just like it was not correctly designed.
Yeah, if I can add, I think the design of quite a few of them is maybe even disruptive, but it's definitely good. I think many engineers sort of know what they're doing. What I was worried about coming from finance and financial risk management in the past is, I guess the risks when it comes to economic exploits, right? And if we even look at the markets these days, and I'm sure everyone was aware of what happened in the last few days with a potential failed, as we now know, exploit of Aave, is that there's still, let's say, small but still present opportunities for not technical exploits. I think we can all agree that blue chip DeFi protocols are fairly or doing fairly well, weathering the storm from a technical perspective. But on an economic exploit perspective, I think there's still some work to be done. So for instance, we introduce something known as a toxicity number that looks at all underlying markets, essentially the tokens, how they're lent and borrowed across all DeFi lending protocols, because there's some sort of systemic risk to certain assets. And even if your protocol by design is working very well, there's still someone with a lot of money, essentially liquidity, could potentially exploit it on an economical level. And I think given that we have less and less protocols still surviving, exploiters will try to focus on not just the technical one, technical exploits, but rather also economical. And this is something I think we have to be aware of as a DeFi industry, and work towards a future where we make it really almost bulletproof against also such economic exploits.
Hello. Okay. Well, I think both, let's say, both architectures for building financial services. So, like either the CeFi rails and the DeFi rails have different risk models, right? Because so, like in the centralized world, that you have to trust other humans who are running these financial services. And with FTX, we've seen never trust humans, because in the end, so you need to, because in the end you need to design processes and have controls and auditors who control these processes and so on and so forth. And then we're pretty close to banking regulation and so on, because like if you offer a centralized financial service to somebody, it's almost like running a bank. And I think so that's also what we're now seeing in the CeFi world, that these products and offerings will more and more become bank-like products. But now coming to DeFi, so also like you said, the risk is definitely different ones, because the highest risk definitely is the hacking risk, like the technical risk, because a smart contract has a direct exposure to the rails connected to it, to the ledger. So therefore, if there's an exploit, it's very easy to really drain the smart contract in the pool, and the money is almost gone forever. And for that reason, you need to manage this risk in a different way. And the one way you can do this is, of course, technical audits and so on. But of course, and also like the introduction of like more and more frameworks, because also when you look back for the past 2 years, many exploits that we've seen also in smaller protocols are just, let's say, child errors, so where somebody built something without much experience, and so those people would have delivered higher quality if they would have used whatever OpenZeppelin or like some frameworks that others are using to not make like any mistake themselves. Other than that, so as we will never get that direct exposure to the ledger away from blockchain, because that's the core idea, we need to think about other stuff to protect the users of the protocols. And from my perspective, it's two things. One could be also whatever a DAO that runs a liability umbrella, so like we have in the banking industry. So some funds are protected, and maybe we need to have industry standards. Not the Binance one. The Binance one is that was announced as like a centralized one, but maybe we need to have like Aave Compound and different protocols with the same risk exposure working together, and maybe then also guaranteeing and setting certain quality standards, maybe even doing cross-checks between the protocols to really make sure that kind of like if shit hits the fan, that the customers get something back. And maybe the second idea that I could say is that we maybe need to have circuit breakers or stuff like that on chain. So because like if like money is moving out, so that we can at least delay it so that people can react and so on. Because so I'm always thinking about like what needs to happen to bring DeFi to the masses. And if events like with Luna, hey, you invested at your own risk and now your money is gone, so it's your fault. I think the industry will never make it to the masses.
Yeah, so if we look back over the past year or a couple of years, it's very easy to say like, oh, DeFi is breaking, or it should only be DeFi, or some sort of polar view on the world. And I just don't think that's accurate, because I think you have to bear in mind that DeFi is on an evolution in the same way cryptocurrency has been on an evolution for about 10 years now. So it's easy to look at Bitcoin and be like, oh, it works perfectly. But early days Bitcoin, it wasn't that clean. So early on when the first ASICs came out, people were afraid that they were going to take over the network. There was the BSV fork, there was the BCH fork. I mean, there have been major attacks on all of the underlying networks that we accept as being stable today. Ethereum Classic, the DAO hack, or the DAO hack, yeah, I guess it was a hack in the end. Just off the top of my head. So DeFi is going through a similar evolution now, where these things like RectHQ does a great job of like showcasing problems that happen and helping other people learn from the problems that are happening, but DeFi is being hardened in real time on the global stage, and that's the way it has to be, unfortunately, and that unfortunately means things are going to play out very publicly. But if you take a step back and look at a centralized venue versus a decentralized venue, through the history, there's only kind of two things you can do to lose money in a CeFi venue. They either steal the money, like FTX or Celsius, or they get hacked, Bitstamp, Bitfinex, and many others like them. But there's only sort of two moves on the dance floor for them, whereas with DeFi, there's like quite a lot of other things that have to get hardened. The financial incentives have to get hardened, the governance, the custody, the smart contracts. And once they do, I think they'll be much more resilient and much stronger than the centralized venues. In much the same way we look at Bitcoin and Ethereum today and assume that they're just rock solid. The truth is they weren't a few years ago, it's just they look solid now. So I think we're in an evolutionary stage, and it sucks that people are losing money, it really does, but this is part of the game. If you want the big returns, you have to accept the risk, I think.
Okay, let's go back again to all the centralized exchanges failing, FTX. Do you guys work in DeFi on projects? Do you see outflow of customers from centralized exchanges to protocols, to decentralized wallets, to hardware wallets? Is there some kind of trend happening in the past few weeks?
Yeah, so I can definitely say, so there's like a lot of evidence, so we can see this in our numbers, but also I read a lot of reports, like even in mainstream media, so like in Germany, Handelsblatt, one of the most important business magazines, was even quoting that in one of the recent FTX articles yesterday, and in the end, so like I said earlier, you have the choice, you can trust humans so that they do what they tell you what they're doing, or you can trust the machine executing the code like it is instructed. And from my point of view, and that's what I also explain like over years now, also to politicians and different people like outside the crypto space, that's one of the big benefits of DeFi, that there is kind of there's a service that's delivered purely through a software. You can inspect the software, you can audit it, you can ask others to audit it, and in the end, if this code is working correctly, then it's kind of, yeah, it will be repetitively done that way forever. And I think that the level of security and trust that you can have with software programs is much higher than in the traditional world, with regulations, process descriptions, and audits that are done by audit firms. And therefore, I think we also keep on going to really explain this to everyone, that so we can build a much better and much more trustworthy financial service ecosystem on that platform.
Yeah, in regards to your question, I think we're definitely seeing a shift from CeFi, Sexes, more towards DeFi. A bit surprisingly to me, but thank God, I think the industry is somewhat starting to move ahead and think ahead. And you know, I definitely spend way too much time on Twitter, like probably almost everyone else in the space. So I think it's definitely time for a new narrative and just to move on, even though I understand that the pain will be felt, especially by users that were directly impacted for a very long time. But you know, it's not like we haven't been here before in a space. So I think we'll survive from this, and DeFi most definitely will come out stronger out of this. So I can say for our protocol, we're seeing more inflows. I mean, initially, obviously, there were outflows because people are just scared in general. And obviously, it doesn't help if mainstream media labeled all crypto as bad and as corrupt, or whatever SBF was doing. Obviously, you know, I felt insulted indirectly, and I'm sure, I don't know, Julien can say more, because Rec News is definitely a very well-known, well-respected media outlet in the space. So yeah, would like to hear what he thinks. But in general, I think DeFi will come out stronger in the long term out of this.
Yes,
Kevin?
Yeah, so we're at XDEFI Wallet. We support about 80% of all the assets on CoinGecko. So all the Ethereum assets, Bitcoin, Solana, and Thorchain assets as well. So for us, this is some of the fastest growth we've seen in the past week or two. We're up over 140,000 weekly active users now. That's about 120% growth on the year. We're adding thousands of users a day. It's every morning we just wake up and Google tells us a few thousand people created a wallet. So it remains to be seen, truthfully, whether this is a short-term trend or a long-term migration away from CeFi. But right now, we're definitely seeing the numbers come in, and it's really wonderful to see.
Julien, something to add regarding curve, outflow of users towards DeFi? Maybe Rec News as well?
Well, that's for sure that what happened in the space over the past few months will consolidate and will make DeFi stronger. That's for sure, and it is better that it happened now than later, because the amount of TVL, of total value lock into those protocols, will normally increase over time. So whatever hacks and exploits are possible today, the system will be updated in order to fix those different either oracle manipulations, exploits, and other things. So it's like the normal evolution of a society when you have a piece of software or you have a tool that gets wrecked and people fix it and make it stronger. It's the same happened in traditional finance with the banking industry. Before it was very easy to rob a bank, and now it's a little bit more difficult. So, having said that, I wouldn't agree with all the people on the panel saying that we're seeing a huge amount of people coming into DeFi. I don't think this is true. When you look at the numbers in on-chain, when you look at the numbers on-chain, you don't necessarily have a lot of more people coming into DeFi. This is people still use centralized exchanges such as Binance compared to, I would say by the order of magnitude, the amount of people that we're seeing in DeFi coming is way less than what we see either in traditional finance or centralized exchanges. I hope it will change, but saying that we're seeing an enormous amount of like a huge migration into DeFi, this is not true. I mean, according to the numbers in on-chain, maybe numbers in centralized tool can say whatever you want. But yeah, it's, and now that the space saw those type of hack, like FTX and Celsius, Trilo Capital, Voyager, type those different guys, they will assume that it's crypto that failed. And that's a big issue because those people, centralized entity, okay, they're selling and they're giving access to some crypto asset or whatever, but they have nothing to do with DeFi and crypto. And the problem is the public opinion. For them, it's different, and they believe that if FTX failed, it's a crypto industry that collapsed. No, there are traditional behaviors outside of crypto that are impacting us because they still do those kind of criminal activities. But yeah, the DeFi space is getting stronger. I'm not sure if we don't have like a huge amount of migration of people, but we're building in order for in the future to be able to receive those people that will leave either traditional finance or traditional finance will use those different DeFi tools to fix some of the problem, and then at the end we'll be working together to make the society a better place.
Thanks, Julien. Following up on your statement on the outflow, maybe it's not that big. So looking at the reasons for that, like, is there like a barrier for the average user to use DeFi? Are still wallets, like from design user perspective, too complex? Self-custody is maybe also a huge topic for the average user still, after so many years in crypto. Where do you see are the pinpoints for onboarding more people into DeFi in the future? Like, is it the wallet? Is it the infrastructure? Trust in the protocols? Where is the problem there? Garry?
Yeah, if I can start, but I'm sure everyone has a very strong opinion on that. So if you would ask me 2 years ago, I would definitely say, let's fix the front end. Let's make it basically as easy as for a child to engage and use DeFi. Now, with more experience, I would say, or at least that's my thesis now. The underlying rails are probably still need to be perfectionized, and then in the end, I feel, so for instance, we're working very closely with Polygon, and for instance now they onboarded Nubank and Robinhood to their supernets, right? Arguably two of the biggest Web2 fintechs on the planet, and their users, at least by talking to them, we understood that their users don't really care who owns the front end. They just want something user-friendly. But what they struggle with is to find essentially a backend of a, let's say, a DeFi backend that seamlessly connects to, let's say, their front end. And let's be honest, someone like Robinhood and Nubank will probably still own the front end for the foreseeable future, just because maybe they have already quite a significant head start and advantage. I'm not saying front ends are not able to be disrupted, but it will be more difficult. So our thesis is that why not focus on making sure that the integration on the back for instance, for something like Polygon Supernet or Edge, works seamlessly with a DeFi protocol such as Curve or OVX or other solutions. So yeah, that's my opinion.
Well, so like I said earlier, I think DeFi is still very difficult to use for many people. So that's kind of the starting point. But at the same time, we also always need to think about like, okay, so what other opportunities do people have to invest their money? And we are now living in times where the interest rates are rising again. Kind of, if I can get more yield, like from a governmental bond, like in the US, like a US Treasuries bond, compared to some DeFi protocols, and at the same time that's insured, like in Europe, for example, you have the liability umbrella, and there's like a counterparty that if something goes wrong, so I can go to court and pull them in front of the court as well. I think in the end it's easy to use as they have the bank account already. So I think we, as the industry, have to think about how can we actually beat also our competitors like outside of crypto. And for me, this starts like with the ease of use. I think that's something that we can solve. It then continues with, like I said earlier, also like with insurance and having like a liability umbrella, maybe even like somebody like accountable on the other side, so that the people actually have something in their hand if they invest their whole savings for their retirement into the DeFi industry. And we need to deliver products to invest in that really matter to the people. And I think so what we've seen over the past 2 years, like yield farming, new tokens coming out, IDOs, and so on and so forth, I think that was really great experience to also test drive the DeFi rails. But I'm really keen over the next few years to see more and more traditional assets also coming into the DeFi space, whatever tokenized stocks, or even like in Germany there's the electronic securities law that has been rolled out already a year ago. It's supposed to be rolled out on stocks as well, rather in this legislation period of the current government. And I think if the two worlds start really to marry and become hybrid, so kind of like that I can put money into a stock, like in the real digital security, and at the same time I use DeFi infrastructure. I'm my own custodian. I use a decentralized exchange. I can do this at a global scale because the money rails are becoming global. I think that's where we need to go.
Yeah, so I think it's very easy and very true to say that DeFi has terrible user experience. You have to sign all the contracts over and over again. You have to get the layer 1 gas if you want to go play around on a different blockchain. There's a lot of things that are terrible about it. I think it's also important to remember like how we arrived at this. So the reason you have to sign all these transactions is because for security. So a wallet can make it so that it auto-signs for you. That is like a very feasible thing to do. The problem is if it starts auto-signing and someone compromises the dApp, then all your money's gone. So there's always a trade-off involved, and we are finding our way to the best way to navigate that. So for example, at XDEFI Wallet, we abstract away the idea of blockchains as much as we can. We're trying to make signing easier, but can't really get rid of it because it's there for your safety. Also trying to abstract away the concept of layer 1 gas. So people are working to solve this, and there's a few other projects working on this as well. But it will take time. And I think it's only about a year or two old that we've had multi-chain world, that we've had all these different applications coming online. So it just takes a little bit of time, and that's, I think, very natural.
Maybe since we are approaching our finish line, why not like each one of you like take like I guess in the future, what's for you like the future of DeFi? What are you looking forward to? Like for example, is there some kind of DeFi primitive you like, new protocols? Like for example, we see DYDX, GMX, decentralized exchanges, perpetuals coming onto DeFi. So in one sentence, each one of you, what are you looking forward to for DeFi in the future? Garry?
I'm very bullish on self-sovereign ownership and KYC. I think this might be the biggest bottleneck currently of DeFi becoming a new financial primitive. Once that happens, we will not call DeFi DeFi, but just finance.
Yeah, so like I said, for me it's DeFi infrastructure in combination with like almost any kind of asset that people want to own, trade, stake, and lend?
I think the main things are very obvious, like wallets, futures trading, swapping, things like that. Those are all very obvious. For me, the exciting thing is going to be the applications that we don't see coming. So like 2017, CryptoKitties popped on the scene. I don't think a lot of people were expecting that to go as big as it did or show the potential of what NFTs could do. So what I'm excited about is the things that people in this room maybe are working on or people out there are working on, but aren't totally obvious to everyone. Because the obvious answers are very easy to point at right now, and I think the unobvious ones are going to be the very exciting ones to see over the next couple of years.
And Julien?
I think as soon as the big players in the world like Twitter, Instagram, TikTok, all the different guys, they start integrating crypto protocols in such a way that for users it's completely transparent. They don't even know that they're using crypto or like NFTs or whatever. These will completely change the space. And in the DeFi world, well, looking into more complicated products such as bond, debts, and all different type of things that the traditional market is driven by. So we're talking about $1 trillion market.
Okay, thank you. And we've approached the end of our panel. Round of applause for our panelists, people. Thank you. And thank you all for joining us. I will hand over to NBX.
Thank you so very much, gentlemen. Valentin, thank you for the moderation as well. Thank you so much. All the best.